leaps at $12.50 calls for 2028 on Zeta today. I couldn't help myself. Down 8%. I have to nibble in, right? I have to do something with, especially going into earnings tomorrow. Like, everybody wants to talk about like how much more downside there is, but no one wants to talk about that they have earnings tomorrow, and that could be the concrete bottom for the stock for multi years. Nobody's talking about that. Yep. They just think, SaaS is going down, everything's going down, and that's it. It's just going to keep going down, which it definitely could. But
yeah,
man, it's crazy. It's crazy, dude.
Like I mentioned to you just before we kicked off this stream, I think there's some more downside still to come across the entire market with our brand pending Iran strikes if they do happen. But that has the potential to just bring it down to a new bottom. We'll have to see what occurs there. But I think some of these SaaS names will get hit even harder. Like looking at companies like Microsoft too, it's crazy to see it at these almost mid 300s now. And I think if we do see those Iran strikes, the whole market will sell off quite heavily when that occurs. And you're going to see Microsoft, companies like that, at lows that we haven't seen in probably more than 12 months. Specifically what that means for Zeta, Zeta could go down to like, let's pull up the chart right now. It could probably find some new lows in the next 12 months, right? Looking back on the last 12 months, or just refine those previous lows, perhaps. Probably around that 1350, 1370 range, probably in there. Which wouldn't be pretty, but you know what? Frankly, I'm holding this stock for the long term. I'm a long-term investor. I'm completely comfortable just accumulating in this entire pocket right now. I have no issues with that.
Yeah, really, the only person that should be sweating is me with my 2028 leaps, because at the end of the day, if the market goes into a bear market, which I don't believe that it's going to, I believe that I've been saying this, that we're going to have a 10 to 15% correction, and then we're going to bottom out, and then we're going to see a ripper rally into end of year. Whether that takes us back to where we were in that ripper rally was however much we fell. So if we fell 10 to 15%, and then you gain 10 to 15%, right? Depends on where you're buying. But yeah, the story that is Zeta is just, it's kind of, like I said, it's kind of crazy that we're seeing these levels, because this stock is just disgustingly undervalued. It's about to flip the profitability. Everything under the sun. And we were talking about this before we jumped on the live stream, right? What has changed with Zeta since they announced the OpenAI partnership and talking about generalized engine optimization, GEO, right? And that whole endeavor since September, and now partnering with ChatGPT and OpenAI, like we talked about, what has changed? Have you noticed anything that has changed with Zeta? Anything that they announced? Anything that they did? Exactly. Nothing. The only thing that has changed in this market is the hype and awareness around Claude and Claudebot, and everybody and my grandmother running out to buy a new Mac Mini, to buy 10 new Mac Minis, because I'm going to create a Claudebot army, and I'm going to be able to do everything, and it's going to change my life forever and fix it. And I'll sell you a course on it. Nick, you want a course on how to run Claudebot? I'll sell you a $10,000 course right now. I promise you I know what I'm doing. These are the things that we see over and over and over again. It's affiliate freaking marketing with Amazon. It's TikTok shop. And it's just like, dude, I'm not knocking it and saying it's not good. I'm just saying, like, oh, man, dude. Zeta has first-party data like we always talk about. That's their moat. So how is Claude bought? And how is Claude going to run and function Zeta or a Zeta-esque competitor platform?
They can't. See, that's what people don't understand yet. And I don't think the market really understands this either. And they clearly haven't priced it accordingly, because anybody who has first-party proprietary data is in the clear. if you can't synthesize that data, if you can't get it from third-party sources or public, registries, and the AI agents can't just harvest that information, then these LLMs, these AI agents, are actually going to be a massive tailwind for your company. And Zeta's in, this fortunate position where they've collected a massive suite of first-party proprietary data, just like the walled gardens, Google, Amazon, Meta. These companies are going to be in a really good position when you start using AI to actually accelerate the utilization of that data, and you start to do some really cool things with that. And that's what Athena is. Athena is literally just the beginning of what Zeta could do. So I think these sort of companies are going to be differentiated eventually, and the market's going to price them accordingly. I think companies who don't have this first party proprietary data or any sort of data moat, let's put it that way, will be punished quite harshly, because you're going to start seeing that their moat, or their quote unquote pseudo moat, right, is going to be eroded, if not evaporated, quite rapidly over the next year or so. But on the flip side of the coin, like I mentioned, these companies with first party proprietary data, Zeta Global, they're going to do very well. And when the market catches on to that, it'll be quite rewarding if you're a long-term shareholder that's able to hold through this volatility. Or, if you're a new shareholder, if you're looking to start a position, you may get some good buying prices quite soon.
You already got them.
Yeah, I mean, you may get even better ones. Like you're pulling up the chart right now, that yellow line right there. We may see that, right? What is that?
Oh, right here. Yeah, this is I believe this is a 50 on the monthly. Mm-hmm. On the month. Again, this is the monthly chart for me, right? And this is my matrix. I built this indicator, but basically when you get these bullish crosses, like down here in the sweet spot, and you bullish cross out of it, it gets very, very rewarding. And as you see, all the stuff that's happened, the run up to 25, the drop down to 14, after all that, the monthly, each one of these candles is 1 month. The monthly time frame is still what? It's still in an uptrend.
It's true.
Could it be a bear flag? Sure. If the markets are going to absolutely puke, it could be a bear flag. But at the end of the day, I only see the fundamentals getting better for Zeta. I only see them, like I see them crushing earnings coming up tomorrow. So, and then flipping to profitability. I mean,
I agree.
Yeah. If we look at a weekly chart, it looks disgusting. Like it just straight up looks disgusting. But you're not below the 200 week moving average, that's right? True. And ever since, right, you got the 200 week moving average to form on this company, that's exactly where it held in April lows. And here in April lows, what did we have? We had still a pretty fresh lawsuit, a pretty big drop off with the price selling off. We had tariff get in, and what else? People were still unsure about Zeta and the product and so on and so forth. But now, I mean, we're getting close to that again. And what do we have? We have a company that's about to flip profitable. We have a company that's continuing to increase their free cash flow margins, their net margins, their gross operating profit margins, their revenues, their net income, their free cash flow, their customer base, their $1 million plus customer base. They launched a whole new product with Athena, and it's basically like their AIP moment. But no one, they partner with OpenAI. Nobody wants to talk about that though.
Yeah, it's crazy. It's crazy. It's, the baby's been thrown out with the bathwater, right? Now, I think the real selling point here is forward guidance and that inflection point into GAAP profitability. If they do achieve that, which I do think the odds are, Zeta will likely achieve GAAP profitability. I've given it about a 75% chance through my estimations. I'm just looking at all the different, bull bear base case, and we could kind of go over that in a moment. But yeah, Ronnie has this up on screen now. This is perfect. This is a great segue. So essentially, here's a little reminder to everybody: read the footnotes in the slideshows and the little the press releases for every earnings report, no matter what company you're following. You're going to find little tidbits in there that are very helpful, specifically as it pertains to Zeta Global. You can see here that management says it is important to note that we expect an additional 15 million to 20 million of Marigold acquisition related expenses in the fourth quarter 2025, which will not impact adjusted EBITDA as expected, but it will impact our GAAP net income. Now, does that mean they won't be GAAP profitable this quarter? No, it doesn't mean they won't be, but if you're doing forward guidance or forward projections like we have here, we'll show these in a minute. It's something to account for. So I said, okay, let's run some simulations, and I've come up here, and we could go over these here in a minute. But essentially, I've come up with a bull case, a base case, and a bear case scenario. And if you scroll up, Ronnie, just a bit, essentially for these projections, I said, okay, what would it take to achieve, GAAP EPS of 1 cent essentially? And what they would need is about 95.9 million in adjusted EBITDA. I'm going to send you a link here, Ronnie, just so we can pull it up on screen. Let's cross-reference real quick, guys. And we're going to go over this tomorrow too, just as a little refresher beforehand. But here, I just sent you the link, Ronnie. That's the guidance revision page from Zeta. It's good to get a little baseline here and understand, okay, what is management guiding? What are we looking at as our projections, and kind of cross-reference these things so the math checks out for you guys. Okay, so if we scroll down just a little bit, and if you go to guidance and then full year 2025, okay, perfect. Okay, so if you scroll up just a tad, fourth quarter 2025. Okay, so that first line. Okay.
Sorry.
No worries. Okay, here we go. Okay, what I really want you to highlight there is the adjusted EBITDA. So it says 90, so the second node, increasing adjusted EBITDA guidance to a range of 90.7 million to 91.5 million. So essentially what they're saying here is the midpoint is about, if you go back to my post, the midpoint is at about, what is it here? 91.1 million. That's the midpoint, right? So for them to hit GAAP profitability, they need to hit 95.9 million adjusted EBITDA. Okay, keep that in mind. That's a 5.3% beat. On average, their beat from the midpoint every quarter, because they've beaten and raised every single quarter consecutively for the last 17 quarters. Their average beat is 7.2. Their median beat is 6.4. All they need to beat by is 5.3%. So what's essentially going to allow us to achieve, or Zeta Global to achieve, GAAP profitability next quarter is the acquisition related expenses. They've quoted somewhere between 15 and 20 million. What does that look like? So if we open up that first screenshot there on screen, Ronnie, this is the bull case. So here, what I've done is I've taken some of the best estimates I could, looking at historical averages and expenses at the moment. So estimated D&A and interest, those could fluctuate. So, those may be off by $1 million here, $1 million there, to the upside or the downside. It may benefit us, it may be detrimental. And this is why these are just projections. So bear that in mind. There's a limited degree of accuracy with these. This is not 100% science, okay? But what does matter here is the acquisition related expenses. So if you go to the acquisition expense line and just circle that with your cursor, Ronnie, so people can see that on the left-hand side, just above tax rate.
Probably can't see it that well.
I can't see that well. Okay, anyway, so essentially in the bull case, I said, okay, bull case scenario, they're only going to have 15 million of expenses. So what does that look like? In line, that looks like we achieve GAAP net income roughly of about 0.9 million. If we beat by 4%, then we hit GAAP profitability of 3.8 million. If we get a 6% beat, that's 5.3 million. 8% beat, that's a 6.7 million. 10% beat, the most unlikely, about 8 million. Okay, so that's a bull case scenario. Let's move over to the next one. So this is the base case scenario. And you'll see why I say 5.3% beat, in the best case, in the most optimistic scenario. That's obviously for the bull case. Let's see here. So this is, as you can see, the acquisition expenses I've said, okay, base case somewhere in the middle, 17.5 million of acquisition related expenses. If we get an in line, that means we miss, right? We're not GAAP profitable. GAAP income would be negative 1.4 million. If we get a 4% beat on that, we hit 1.8 million. Okay. 6% beat, 3.3. You could kind of see those numbers there. You guys can go over this post later on, but then let's go to the bear case because this is where it gets most spicy.
Yeah, watch out. That's spicy. I'm going to make Canada the 51st state again.
Yeah, man. I made it spicy, dude. I just put my whole country up for grabs there.
You guys don't have tariffs anymore, right? You're just going to be the 51st.
Yeah. Okay, so in this situation, bear case scenario, 20 million of acquisition related expenses in line. We're definitely not GAAP profitable. If we get a 4% beat, again, we're just not GAAP profitable. If we get a 6% beat, we are GAAP profitable. So essentially across the board, no matter what scenario, if we get a 6% beat, we're in the clear, roughly. Okay. Now, obviously on the base case scenario, if we get a 5.3% beat, it looks like we're clear and we're profitable. We'll have to wait and see. It depends on the situation. What do I think is going to happen? I give it about a 75% chance that we do hit GAAP profitability. The management team made it pretty clear last quarter. Chris Greiner came out on the call and said, if it wasn't for, I think it was a $6.5 million, dollar acquisition related expense. I think it was acquisition related expense, Ronnie. I think so. They would have been GAAP profitable last quarter. Now, they really emphasized that. Do I think they'll be GAAP profitable this quarter? Again, 75% chance. I think that's my guess. There's really no knowing with these types of things. Like I said, the interest could be slightly higher than we expected. D&A could slightly be off. Like I think I quoted 8 million there, 18 million there across the board. It could be slightly different. And it comes down to fine margins too, right? Like most of those projections output of roughly 1 million or within that range, 1 to 2 million profitability margin, right? That could be off, right? If we're off in D&A by $1 or $2 million, or even in the interest by $1 million, that it could throw these GAAP profitability projections off significantly. So ultimately, at the end of the day, there is a good chance that we hit GAAP profitability, but there is still an opportunity that we don't. Ultimately, if we don't hit GAAP profitability this quarter, it'll be a burn. What happens to the stock the following day and after hours truly relies on guidance at that point. What does that mean for Q1? It means that, hey, the expectations are even higher, and the odds are we likely hit it in Q1. Now, I'm going to remain optimistic. I do think that management's very tactical with how they give their guidance and issue it, keeping in mind something else that, a little tidbit here that may have been overlooked by many people. Management did not give us a top end range for 2026. So when they gave us their guide for back in Q3, or whenever they announced the Marigold acquisition, when they gave us the guide for 2026, the preliminary guide, they never gave us a top end of that range. They only gave us the bottom end of that range. So it's something to keep in mind, that the bottom end is only a 34% year-over-year growth rate for next year. And they consistently beat each quarter somewhere around 6% from the mid range. So it's going to be pivotal to understand what is that top end, right? Is that top end close to 39% year over year, 40% year over year? What is it? Because that's going to tell us a lot about the future guide and the future performance and the management's expectations of the performance. And also, hearing some commentary on Zeta Global's new piece of technology, Athena, that'll be key as well, because essentially, for those who don't know what that is, it's a massive flywheel to sell other products, other channels for the company. Before the implementation of Athena, Zeta's average client only uses 2 to 3 channels. So they only have 2 to 3 applications for Zeta Global's infrastructure when they have, a dozen to, I think it was 18 different channels that David last said. Now they look at employing new channels every single quarter and every single year that goes on to kind of, bolster their roster of technology, and they're offering to their clients. But essentially what this means is that Athena is going to consistently recommend a new technology to these clients and upselling Zeta's products for them. it's going to be a massive tailwind for them. And that's just another beneficiary of AI, right? It's just a bull case, essentially.
Yeah, so I was looking, because I was reading that earnings preview right here, and I was like, oh yeah, that's right. AppLovin's down.
Yep.
And people may confuse AppLovin's business with Zeta's business, and that could also just be another reason.
Yeah, they compete in different sectors of MarTech and ad tech, right? They are more of a pure ad tech play. They're really competing right now in mobile gaming, right? That's their bread and butter. Now they are making a bridge over to the open internet, the open web. They are collecting SKU data from Shopify. Now Zeta Global already does that. They already have integrations with Shopify. However, AppLovin's a much bigger company. So what it relies on, data collection, it relies on, so it's permissive data. It's data that Shopify essentially grants you to collect by having like, a permissions check, like do you sign away, whatever, right? Now, when somebody builds out their Shopify store, they have the ability to literally, with a click of a button, integrate an SDK, essentially. It's like a software development kit. That's essentially what you would use in app development. Now for web development or web store development or e-commerce, it's like essentially a software packet that's just like added, a line of code really is just added into the back end of your website. That's a massive webhook that allows you to collect that information, that SKU information. So when everybody clicks on something, adds something to their cart or buys something, it allows, AppLovin or Zeta Global to collect that information and attribute that to a specific person. Now, AppLovin's a much bigger company, right? So you may have
120 mil.
Yeah, you may have
128 billion, and they're doing 5.4 billion in revenue.
Yeah,
5.8 billion trailing 12 month and 3.3 billion in net income.
Yeah, it's crazy.
Which is crazy because like they're 129 billion and they're doing 5.8 and 3.3, and then you look at something like Zeta where they're doing 1.2 and they're about to flip to profitable, and they're simply a sub $4 billion market cap.
Yeah, it's crazy.
I think the move that we saw with AppLovin, right? So AppLovin in 2024, I kicked myself because I was looking at this company, right, in 2020 after the bear market and stuff. Look at this move, right? I mean, you were down in the dumps during 2023 bear market and after, from $10 to $90, and then you freaking ran to 750.
Yeah, it's crazy.
It's just insane. But like this, like people talk about it now, right?
Yeah.
But we could be here on Zeta, and I think we are here on Zeta. Like, if you fast forwarded like a couple years from now, and like there's no like recession or bear market at the time or something like that, and you told me that Zeta, 5 to 10x from today, it would not shock. I'd be like, yeah, that's why I was invested in it. Like, you know what I mean?
Well, it sure shows the potential. I mean, when they start talking about what a ROAS or for those who don't know what a ROAS is, it may sound weird, but it's returned on revenue spent, essentially, or ad money spent. So essentially, right now, Zeta Global guarantees $6 to $7 of revenue for every dollar spent on their ad budget. So if they spend $1 on their platform, Zeta Global is saying, on average, our clients return $6 to $7 in revenue, which is a huge ROI, right? Like, that's ridiculous. Like, to say that is absurd. It almost feels like it's not real, but they're able to do that. And the differentiator there is the first party proprietary data. They do it because they have high quality data, and they can point you at people rather than devices. And that's another differentiator between AppLovin and Zeta Global. So Zeta's data is actually richer. It's higher quality than AppLovin's. Although AppLovin is very good at machine learning. Not saying that Zeta can't be. But essentially, at the end of the day, like, Zeta Global is pushing the company towards this profit machine. Oh, hey, Nate, how's it going?
What's up? How's it going, guys?
Hey. Someone just said, Nate, where are you? And I looked down, I saw him. I'm just like scrolling through the charts and shit here.
We're just going on a little rant about Zeta right now. And
the pain we like to endure.
Yeah, the pain that we love to endure.
They were masochists.
Well, like look at AppLovin's margins,
dude.
Since 2024.
Fake,
it's just disgusting, like up and to the right. And then people are like, talking about Zeta sell off, and they're like, this stock can't go up. And it's like, well, the stock did nothing. The company did nothing wrong. It's literally just the market we're in right now. But you just look at this.
Funny enough, I actually nibbled on app just a little bit, teeny tiny bit today.
Yeah.
Yeah, I think it's insane. It's down.
That's
I think it's down from the
support.
all-time highs. It's down almost 50%.
Yeah. We were just talking about like if you were got in this like right after the bear market, like 2023, 2024, you're up like 700%.
Yeah.
Well, you were. Sorry. Now you're only up 305%. Oh no.
Only up 4x. Yeah, big whoop.
But yeah. Yeah, it's crazy, man. This SaaS sell-off, it reminds me a lot of Google. Everybody's selling off Google because AI is going to eat their lunch. And then once the narrative changed, then you see Google go from, just in the dumps to it can barely go down. Barely go down. It literally just flagpoled, in my opinion. Flagpoled on a weekly chart too. And if you don't know what flagpole is, it's basically where a stock goes straight up and barely creates support, right? Create a little bit there and a little bit there. But typical, you're going to have like this structure build. Google just kind of went straight up once we flipped that, the whole the narrative, right? Uber did the same thing, right? Robotaxis are going to kill Uber, blah, blah, blah. And me and Nick were talking about this before we hopped on the live stream. And it feels a lot like DeepSeek. Like sell first, ask questions later, don't care. And next thing you know, one domino falls, one Wall Street, hedge fund, somebody starts buying, and then everybody else starts looking in over there and like realizes that Claude and all these warriors with all their Mac minis are not going to take down the system. So,
you be careful there, Ronnie. Nate's a Mac Mini warrior.
Hey, man.
I'm not, but I did build a little agent. I guess. So, do you think we're in a market that's going to be a quick reversal?
I do.
Okay.
I do. I don't think this is going to be like a drawn out bear market. And my biggest reasoning around it is simply the fact that you just look across the market. Are we still top heavy? Yes. But if you just look across the market and see how many, remember that stocks like Nike and Estee Lauder and like a lot of these safety stocks, although they've run recently, they're still down a lot. Like those companies have been in a bear market. And now you have SaaS in a bear market. You have some fintech in a bear market. You have cybersecurity companies in a bear market. So it's like you're looking at the markets and you're looking at it and you're like, okay, well, there's really only one more domino to fall, and it's like Nvidia and semis, right? In some tech. But like even Amazon has fallen a lot. Meta has fallen a decent bit. Microsoft, because it's SaaS, has fallen a ton. So in my opinion, I'm just like looking at it. I'm like, we're barely off all-time highs. And I'm just sitting there like, what gets the market down the rest of the way? Can low go lower? Of course it can. But at the end of the day, it's really just the top dog Nvidia and his cronies that are left to really kind of topple over and fall down some.
What's interesting too is like we're seeing a lot of consolidation with the AI infra names like Nebius, Iron. All of them the past week have not gone down. Why? I think it's because people are realizing if AI is going to take all these SaaS names and eat their lunch, which is a crazy narrative, you need inference. And so you're seeing Nebius, Iron not really making much move after they had their earnings. They're now kind of flat since the start of last week. Which is interesting because you kind of saw them tag along with the SaaS of just every week dropping 10, 20%. And this is the first like 6 or 7 trading days where they're actually kind of,
they're kind of hanging flat in there.
Yeah, which is interesting. Same with Nvidia, where like you see all this capex spend. It's obviously the most bullish for Nvidia, and it's kind of just staying flat and barely going up, which is also odd to me. We're in a weird market, man.
Yeah, we really are. I may be completely wrong with this rounded top. I was dead on with Robinhood and I was dead on with SoFi when I called out those rounded tops. I might be dead wrong here on Nvidia, and simply put, because if you run legitimate like assumptions, even conservative assumptions with what Nvidia is doing right now and what they're expected to do, and analysts probably aren't even bullish enough around the CapEx spend, they're still undervalued. And believe it or not, Nvidia is still undervalued. That's the crazy thing about it. So I could be dead wrong on this, and the bottom could actually be Nvidia earnings. And it sounds crazy that I'm saying that, but it could. When you get this consolidation, I thought I
Or
had the chart.
it could just further drive the narrative that AI is taking over. You know, if Nvidia comes in
Yeah.
and crushes, and people go, "Oh, they need chips because they were gonna," I don't know.
Yeah.
I think it's
It
interesting.
could. Oh shit. Whoops. But yeah, it's consolidating. Whenever you get consolidation, you get expansion. It's either going to be expansion up or it's going to be expansion down, right? I mean, very, very obvious, very simple. But yeah, man, I could be wrong about this rounded top because at the end of the day, like a lot of that CapEx spend is going Nvidia's way. Nvidia's been holding up incredibly well.
Yep.
Like everything around it is just collapsing, and Nvidia is holding up incredibly well. But like this is what I mean when I talk about the markets, and I'll butt this up real quick, so we can talk about more about Zeta. But like you look at IGV, I mean you're literally at April lows, 2024 lows. And you push a little bit lower, then you're at 2023, highs.
That's crazy.
It's insane, and like
I remember talking about this. They had IGV had the more drastic drop than during COVID.
Yeah,
Like
it's insane.
literally, which is insane. Like it was a much more worried time to be worried than now, in my opinion, in terms of just the overall like uncertainty of where the market's heading and macro thesis.
Yeah,
like I mean, we saw today. Claude came out and said, "Oh yeah, we can do some stuff with COBOL," and then IBM goes down to 11% or something. It's like, okay, like Claude can literally now just legit just controls the market of whatever they say. Anything affected is going down 10 to 15%.
Yeah, man. When you look at actual like I love to look at like markets and sectors and stuff to really understand what's going on in the bigger like scheme of things. If you really want to look and if you really want to know where like the best opportunity is at right now to be ready to buy or DCAing or whatever, it's really going to be like your finance. Your finance is really pulling back right now. FinX has just collapsed. This is like your upstarts and your PGYs, Pagayos, all these different companies.
Destroyed.
Yeah, like look at this. This is like just falling knives on ETFs. It's crazy. IGV, straight falling knife. Cybersecurity companies, we don't want them. Dying. SaaS cloud companies, dying. Wise AI agents, dying. Which makes zero sense. Like, oh, we hate like AI, like Claude is the only AI agent company. Fuck Path, like it's insane, dude.
It's crazy.
So yeah, and safety stuff has been running a decent bit. But yeah, like those are like the sectors that like just watch out because when they turn, and like as a trader and an investor, like I'm just waiting. I'm just sitting here, just like, all right, like when these things turn, like I'm pushing hard in them. Yeah, even like the stuff that was hot, like drones and space and everything, it's really cooling off and like going through like this topping pattern and stuff.
Let's circle back to Zeta. Let's circle back to Zeta a little bit.
Yeah, let's do it. Yeah.
Sorry to pivot here, Ronnie, but Nate, what are your thoughts moving into earnings? Like, are you overall bullish? Are you bearish? What's your outlook? What do you think specifically about gap profitability?
Yeah, I think in terms of stock sentiment, I'm definitely bearish. I think no matter what they come out with, it's going to be sold off later on. I mean, we saw even something similar with Lemonade, where Lemonade crush earnings was up 20%. Now it's down like 35% since their earnings. Something just atrocious. Mm-hmm. But yeah, I'm bullish on Zeta. I think David is smart enough to understand that now is the time to. I mean, I want to call it momentum, because the price, the stock has lost momentum, but the company themselves needs to continue that momentum. And so I think GAAP profitability is going to happen. I think they're going to make it happen one way or another. I think you've highlighted, Nick, like the different scenarios of which it could happen. But yeah, I'm definitely bullish Zeta, and I think they'll become GAAP profitable moving forward. And I think they're gonna continue like to crush like they've always done. I think it's, I don't know what you said, Nick. I think it's they always beat earnings by 4 to 6% somewhere in there. And so what was the exact number? Do you remember?
Yeah, so the median is 6.4. The average is around 7.2 or 7.1.
Yeah, so they'll beat earnings in my opinion around 6 or 7%. Revenue specifically, not sure on EPS. But yeah, I think they'll be GAAP profitable, and I'm bullish moving forward. I'm honestly really curious to hear commentary on Athena and like how that's been going, the roadmap there, and what their enterprise clients are saying about it. I think that's what I care about the most because that's kind of what I'm betting on the company for. But
How am I just realizing that this exact quarter last year was the one that they had their only profitable quarter?
oh, interesting.
That kind of
They did.
Kind of
So it was like
increased that 75%, doesn't it, Nick?
0.01%.
Yeah, I do think that it's highly likely that that's why I give it a 75% chance. I do think it's highly likely we do hit GAAP profitability.
Yeah, the only quarter was this time last year. And they literally guided for the same non-GAAP 23%, 22 cents. They guided like 23 cents here. So yeah, 15 million. So going back real quick before we jump into other stuff, just because I saw this. What was the expense again?
So somewhere between 15 and 20 million in acquisition related expenses.
Okay.
Yeah.
So dude, they literally just have to do a little bit better than they did last year.
Yeah. It's going to come down to like really fine margins. Really fine margins.
315 million in revenues. They're projected to do 379.
Yeah, honestly, it depends. Like I said, like DNA could be slightly off in my projections. The interest could be slightly off in my projections. They could get this like literally just like under $1 million.
Yeah, it could. Yeah, literally 500K profitability or something.
Yeah, it could be hairline. If they do blow it out of the park and they get like 2 million, 3 million, 4 million, that's fantastic. But I want to see that happen, frankly. But I do think the odds are is that they will be GAAP profitable moving forward. That's the real test of time is it sustainable, right?
Yeah, that's yep. Yeah, I've highlighted that a bunch where you don't see the big runs until usually 2 or 3 quarters after profitability, where a company shows they're going to sustain it and shows the operational leverage of the margin expansion. And
they didn't give a shit. The market didn't give a shit when they did it last year.
Yeah. It also depends on forward guidance. You got to remember, like last year, they were guiding for much slower revenue growth, right?
Yeah. Probably. Yeah, and then they missed.
Like last year was a tough year for Zeta Global, and you see that in the price action there because 2 reasons, right? Like you had the tariff get-in situation, but it's also a off-cycle year when it comes to political spend. So the accelerator in MarTech and AdTech, for those who aren't familiar with this industry, it are the political years, right? The years where you have either midterms or presidential elections. Those are essentially just cash kitties being pushed, funneled into your entire value chain in your company, and they can really push that top line growth to like new highs every single year. And that's why you're seeing Meta, in my opinion, like obviously AI has a lot to do with it, but I think the ad spend coming from either political spending or political adjacent spending is going to, heavily benefit everybody within MarTech and AdTech. And that's why you're seeing companies like Reddit blow it out of the park, Amazon ads blow it out of the park, Google ads across the board blow it out of the park, Meta guiding 33%.
We're just getting started because like probably pretty soon they're going to start rolling these ads out and putting the money in heavily. And who else better knows with guidance than Meta and Zeta and all these companies? Like they know what to be expecting. And this isn't going to be like a blowout in any means for the midterms, like at all.
Yeah.
If anything, they think it's going to be a blowout to the other side. But either way, like both sides are going to be spending heavily, like you said, to win this thing. Yeah. So yeah, Zeta is going to be a big beneficiary of it. So yeah.
I'm excited to see more. I love looking at all their slides. I think they did a great job of breaking out a lot of information.
Amazing.
And so I'm
Amazing.
excited to see out of the Fortune 500 or Fortune 100 how many more enterprise clients they have. I also hope they do have some new slides when it comes or relates to Athena, and some breakouts there. I don't know what exactly they could show, but maybe just some like pipeline adoption and things of that nature for Athena. But I just love seeing all the numbers they break out. So yeah, I'm pumped.
I agree. I made a post the other night. I was running through all the information again about the acquisition with Marigold, and they specifically noted that they added 20 of the world's top 100 advertisers. They're alluding to the Fortune 100, and that would bring Zeta to 64% of the Fortune 100, which would be remarkable. Now, they obviously haven't confirmed that. They hinted towards that on, I think it was like it was some sort of interview he did more recently. I forget which one it was. I was watching it. Anyways, whether it be CNBC or something like that. But at the end of the day, I think they're waiting for this call specifically that summarize, Q4 and fiscal year 2025 and go out with a bang and say, hey, we now service 64% of the Fortune 100. And we are a it's got to be sub 4 billion now, right? After today, let me look.
I think so.
There we go.
Yeah, they are 3.68 billion market cap, and we service 64% of the Fortune 100. It's insane, and we guarantee, what is it, $6 to $7 in revenue for every dollar you spend on ads. I think that's ridiculous. This is a company that's growing into a monster, in my opinion.
How much you said it was? How much?
They added 20. Sorry,
what was your number? Because this is from last quarter.
Yeah. That's last quarter. So that's before the Marigold acquisition. So they said they added 20 new clients. So it'd bring it to 64%.
That's insane, dude.
Yeah.
Did they specifically say Fortune 100 or just 20 new?
They said 20 new. I think, let me find the exact words here. They said, after acquiring Marigold's enterprise business, the deal added 20 of the world's top 100 advertisers to their client roster. And then obviously, if you extrapolate from that, top 100 advertisers, that's most likely the Fortune 100, right? Now, they're going, that language is a little sort of, I'll be open, right? That's opaque. It's not certain, but it's
definitely
obviously
a significant increase. Yeah, right? Regardless, significant increase.
Yeah. Okay, maybe it's 60% or 58%, but that's really, you know what I mean? For a $3.6 billion company, that's absurd. You don't see that. For reference here, I put this in my post. Adobe serves virtually 99% of the Fortune 100. Salesforce serves roughly 88% of the Fortune 100. So if Zeta serves 64%, like you're talking about $100 billion market cap companies. These are massive companies, right? And Zeta is just this small, tiny company that's breaking away and actually just attacking their market cap, saying, hey, we want some of that market share and we're going to eat that up. So anytime that these Fortune 100 companies say, hey, we have some more marketing spend or ad spend, who are we going to use? I think we're going to use Zeta Global, right? They offer the best return on ad spend.
100%.
Something I kind of want to bridge into, just a slight sideway here. I think something like, what am I looking for on this call? There's something that I'm kind of waiting to hear. If we don't hear it, maybe one day I'll have the opportunity to ask the question again. But I think what would be very interesting for Zeta Global is if they could, if they could build a very similar platform, a mediation platform, let's call it that. Something similar to what AppLovin has done on the mobile ad space. They've created a mediation platform called Max, which essentially allows these massive advertisers who are buying up ad space to come and select ad space and buy that and bid for that ad space. This massive auction platform. Now that's specifically for mobile ads. Zeta Global has first-party data across the board. So they also have activation across the board. That's omni-channel. They can activate on any channel, and they own that proprietary data. So when you look at a company like AppLovin, they're a buyer and seller of ad space, right? So they have Max, which is in the center. What people can do, like Meta and Google, they could come in and they can bid for ads on this mediation platform, right? Now, when they bid for those ads, then AppLovin will be able to then issue those out and display those ads for them, et cetera, et cetera. They have data that allows them to do that. What I'm saying here is that what if Zeta could build a mediation platform that then attracts the likes of Meta and Google to come bid for ads verified by the first party data that Zeta has? So that means then you have Meta with their massive ad set and Google with their massive ad set come to Zeta, and they make that Zeta pairing, right? That identity pairing, and say, okay, with extreme high certainty, we know who these people are off of Meta, off of Google platform. And then somebody advertising through Google or somebody advertising through Meta, they could reach all these people who are on different platforms, who aren't even on the internet. It could be analog, and you're setting, a pamphlet or something to somebody's door, or a piece of mail or whatever it may be. Or, it could be like programmatic on CTV, like somebody's putting an ad on Netflix or Spotify or something like that. That, to me, in my opinion, would be quite remarkable. And I think Zeta is in a very good position in order to do that because they have that proprietary first-party data advantage. That's something I'm waiting for. I'm thinking ahead. What could management do? What's next? They're an innovative company. Forrester puts them at the forefront of innovation in MarTech and ad space. So, and for the last 3-4 years. So I think they're going to keep doing that type of thing. So that's something I'm kind of waiting for. I hope an analyst asks the question.
Yeah, I would love them for them to do that and come up and become an AppLovin where they got 60% net income margins and 75% free cash flow margins. That would be great.
Yeah,
we would all retire after that, guys.
Oh yeah, we would.
If Zeta became that.
Dude, they sandbagged their numbers for 2028 so hard.
Oh, they did. Look at that.
Look at this. Okay, let's just say I've done this before, but let's do it again. Also, guys, X isn't sharing the link for some reason. Like, it won't show. It just shows like your picture is like you're live. So if you actually go to X and if you click open your picture, then you can share that as a post. So it actually shows on your live. So I was like, damn, man, like no one's in here. And then I shared it, and then I was like, okay, now people are here. Stupid X. X has been, they've been doing a lot of updates. Have you noticed that? X has been doing a lot of updates, dude. I think that's why they've been going down. Not because of my conspiracy theories of hackers. But anyways, 2.1 billion by 2028. That's only a 20% CAGR only of revenue growth, continuing for the next 3 years. They're about to do 35% this year. That's what they guided for, right? So, and then 16% free cash flow margins, literally running that 3 years, currently at 1.224, trailing 12-month revenue, 20% revenue growth, free cash flow margins 16%. Keep them at a 20. Their current price of free cash flow is 24. Current, after they sold off and everything. Just keep that in mind. 10% discount rate. It's a $27 intrinsic value today. Fair value's 85% off. And then you look at analysts and it's like, what do you know, Ronnie? It's like, okay, well, here, look at analysts. Current price is all the way down here. All the way over here. Yet at $15. Yet the lowest analyst has $25. The consensus is 29 and the high is 36. So is this a Zeta problem? Price of sales is 3.
Yeah, it's
Would be under a 3 price of sales.
So is it a Zeta problem? Or is it just, are they caught up in this whole shit show of Claude and the sell-off of everything and AI?
Yeah, people don't understand the business, man. They just don't understand the business. Like, seriously, people don't comprehend it.
Zeta. Like, I will admit, I do believe that not all SaaS companies are built the same and they're not all going to survive. Like, I think like TTD is like cooked.
Yeah, I think they're cooked too, man.
I think PayPal is eventually cooked. Like, I hate PayPal, but
any niche platforms like a DocuSign.
Yeah, they're cooked.
Yeah,
100%. Yeah, because like it's like, okay, we signed stuff. All right, well, sorry, not much moat there. Like Adobe, right? Adobe's a tough one. I hold it. I'm down on it. But I just think they have the tools and the ability to navigate throughout this because yeah, man, like.
I think the companies that are on the fringe is like, I know we talked about this before, Nate, but Monday.com, it could succumb to in some portions of its business.
Workday too. I think any of those payroll companies like that,
Yeah.
I think it's tough. I don't think you could sit there and be like, well, they got a moat because it's payroll and blah blah blah. And it's like, look, man, AI is getting pretty intelligent. You think it can't do some payroll? You know what I mean? Like it's not going to be like stupid easy. But
with those type of enterprise platforms, though, it's more about the governance and the security. Like
correct.
obviously, the actual tooling is any of it can be replaced from any platform. That's why I think a Workday, honestly, I think they'll be fine for a while. It could be. I remember I saw a stat of like I think newspaper companies from like 2008 to 2015 still grew in revenue, but then after that, it was a slow death, which is years after the internet, years after the iPhone, and then they all just like toppled within like 2 years. So I think it'll be like that where it's going to be, regardless, there'll be a couple of names that die quick, like a DocuSign, and others are going to be like a 10-year, just slow death of trying to figure out if they can stay alive and that sort of thing. And so that's why I think this mass sell-off is just ridiculous.
I didn't even know Intuit sold off this much until like I was looking through charts the other day and I was like, holy shit, dude. I did not, they waterfalled. They straight waterfalled. Do you know if there was like any specific thing or was it just
AI? Yeah, it's just AI.
Dude, like that's the dumbest thing ever. Like with taxes, you know how like secure those are with your W-2s and how secure you have to be with your taxes so you don't get your identity stolen, you get your taxes back with the government, blah blah blah. Like just think, Trump was saying, and we're gonna get back to Zeta, but Trump was saying like he's gonna get rid of taxes and all that stuff, and Intuit didn't even blink. But now, like AI is going to do all your taxes and submit them and all this stuff.
Man, it's trading at a forward PE of 14.7. That's crazy.
Intuit?
Yeah.
Yeah, man.
Obviously, that's non-GAAP. Like it depends on stock-based compensation, but that's crazy, man. That's crazy. You normally wouldn't see companies like that.
Dude, it's at the. Oh my god, it's at bear market lows.
2022. That's crazy.
It's insane, and not COVID lows yet. That would be.
COVID lows would be like an 85% drop. That would be.
Oh my god, dude. They don't deserve it either, like at all, dude. Like the MailChimp that they use. What's that? QuickBooks, dude. Yeah. I don't know. Oh, that's crazy, dude. Yeah, they are literally just selling off everything.
Yeah,
and
crazy.
People, guys, if you think, oh well, if it's getting sold off and the price action's there, the company must suck, right? You could think that, but like you could also think that Wall Street is just a bunch of sheep. They're just a bunch of sheep, and they're a herd mentality, and they follow each other. They follow the leader. Think of DeepSeek. When DeepSeek came out, and DeepSeek's such a non-existent thing now, it's literally a nothing burger. But they sold the markets off like 15% like that. Sold off NVIDIA, the best companies in the world. All the biggest tech companies. They sold it off like nothing.
I think a lot of this is just
pretty smart then.
Just frustrating.
Yeah. Again, it's crazy. Like we look like the beginning of 2025 right here. But again, I don't think like we drop like 20% here. That would take us to like around 500. Yeah. It's actually
2025 was a lot more macro driven. Like this is just nothing.
Yeah. I mean, we went down 7% so far, the furthest on the Qs. Again, it's just kind of crazy that like it's like Armageddon out there. Like, look at where Zeta's at. Look at like in November, Zeta and a lot of companies weren't this bad. Like, that's the crazy thing, man. Like, I don't understand it, right? Because you had a 9%, 8-9% pullback in November. And you guys remember November, it was not like, it didn't feel like this. This feels like a straight up bear market. This feels like a straight up crash to me. With a lot of names out there. I mean,
that's why honestly, I have a feeling this is gonna be more like a 2022 year in terms of more of just a slower bleed. But
you think
that is our bleed has been so quick that it's like, how much lower can we go? Yeah. Whereas 2022 was a lot more like every month was like a few percentage points. It wasn't just a 40% wipeout in the span of 8 weeks.
Yeah, I mean this thing was ugly.
Yeah, 2022 was an ugly year.
But you got to remember, like 2022, the macro environment, we had massive stagflation, right? The economy was in a really bad place. Like we're in a different spot.
Hiking. Rates were hiking.
Exactly.
Like
Exactly. We're moving into a quantitative easing cycle now. We have a Fed chair that's moving out and a new one that's coming in. There's a lot of tailwinds on the macro level. Where the chop is coming from right now is the midterms, right? So like 2022 stacked on top of that stagflation, you also had a midterm year, right? So the market doesn't like the uncertainty.
And that year was also Ukraine, Russia.
Yeah, of course. Well. There's so many different things that can occur. Now, I am worried about the Iranian strikes and what's going to happen there. You don't move all those military assets not to strike something unless you come to some sort of compromise. So I think at this point of time, if we don't see any news in regard to some sort of compromise, odds are we see some sort of strike. How the market responds to that, it's likely that it will take a hit. It won't be a prolonged hit where the market bounce back pretty quick. We did see that in 2022 with obviously just specifically about that one macro level event with Russia. Ukraine.
A war has never started a bear market. A war has never like caused like a crash, like a legit like 20%. It's always a down like 5 to 15%, and then we're up and away. It's actually, if you look back in time, like it's actually bullish for markets. War is bullish for markets, believe it or not.
It's good for the industrials, right? Like if you look at the Lockheeds, you look at the Raytheons, Caterpillars, etc. Right? It's good for those type of companies.
Just look what they did at the beginning of it's like, dude, it's crazy how much the market can foreshadow things. Like it's crazy, dude. Like drones, industrials, defense names, space names, they all ran like crazy into this year and like all of January. And now they're kind of like, pulling back, rightfully so, because they ran it. Like they gave people like 5-year gains in a month. It's insane, dude. But it was just foreshadowing, man. It was foreshadowing. It seems like it was just foreshadowing. Like people always know what's about to happen, I guess.
Okay, let's pivot back to Zeta just a little bit here. Ronnie, do you want to pull up the chart of Zeta's gap income or net income? Let's put up that chart.
Yep.
We'll just talk about forward looking here. We'll look at some of the data. I think tomorrow's going to be a big day for the company, right? We're moving into a new fiscal year as well. Technologically speaking, we have Athena, massive tailwind. So when we're on our live tomorrow, guys, I think we're going live, what, Ronnie, about 3 p.m.? Is that?
Yeah, we're going to start at 3 p.m. That way we have some time to talk about, like, do this kind of stuff. That way, because once earnings kick off, then it's kind of like we're just going to shut up and listen and then talk after.
Yep. Yeah, so it's going to be a busy day. A lot of information forward looking about the company. I'm going to want to hear how that integration of the acquisition of Marigold going, something that a lot of you may not know, but Zeta Global actually has a dedicated acquisitions team that was designed and with the intent and purpose to integrate new companies or companies that were acquired into Zeta Global natively at the core of the company within 12 months. So if they do that in a much quicker, theta period, that's much more beneficial for us as shareholders and much more beneficial for the company performance-wise. What I do want to know, some more information. I want to know a lot, obviously, but specifically about SKU data. So one of the acquisitions or one of the entities that Zeta acquired from the Marigold Enterprises was Marigold Loyalty Program. Now, this loyalty program was sort of the creme de la creme of Marigold for quite some time on their enterprise branch. What it's done is it's created this, like, I always use American Eagle as a sort of an analogy. What it does is it builds that database and that infrastructure for their client to have a rewards program or membership loyalty program. So let's just say every time you go to American Eagle or Aerie or whatever it is for women, you buy a piece of clothing, you gather some points. Those points are saved on your membership profile, et cetera, et cetera. Now, traditionally from like credit card data and just purchase data at your checkout, you'll get information about that user, about that individual, that they purchased an item, and you'll know the sum of that item and the time and the location, all this information. Everybody knows that type of thing through like modern infrastructure. But what you won't know if you don't have that SKU level data is the specific color of product, the specific type of products, the products people bought together, the sizing of that product, et cetera, et cetera, et cetera. Also, all this sort of micro level information that's very unique about an individual that you can build attributes and all these different signals about a person that you can kind of tie to that identity. You won't have that unless you have this SKU data. And that SKU data comes from that massive loyalty program that Marigold had. So talking with David in my interview with him last quarter, he indicated that one of his goals personally, and something that he's super excited about that nobody's really chatted about publicly too much, is the integration of that Marigold loyalty program. And I want to know, I'll have my ears open to this, so you'll hear from me on X, and obviously in our commentary tomorrow, is how that's going, or what are they looking forward to do? Like, how quickly are they on-ramping new clients? So some of those big 44%, of the Fortune 100 companies, how many of those have they already integrated into that loyalty program? What is that looking like moving forward? How many clients do they plan to integrate into that? What's the success plan? What's the trajectory there? Any color they can give us is very important, because this tells us like how much more data enrichment can we get. And that type of data, specifically from the Marigold loyalty program, which will then become, I'm assuming, Zeta loyalty program, it is data that nobody else in the world has. It's very unique, very, very unique.
Yeah, I had to pull it up here. I don't know if you saw. Zeta will be able to offer a new product in Marigold's loyalty offering to Zeta's 567 scaled customers, 40 Fortune 500 companies, 100 global enterprise brands they get access to with this acquisition, including 20 of the top 100 advertisers.
Yep.
Remember we were talking, and then we were riffing about I told you, like, yeah, Zeta was basically this acquisition was like what was it? Sorry, stupid chair's going off, it's distracting me. Like Instagram, like the acquisition of Instagram for Facebook. Obviously in reality it's nowhere near that, but like the sheer like amount of data that they get, and it's the best thing I can compare it to.
Well, what you said was the Live Intent acquisition was akin
Live
to the data.
Intent. There we go.
Yes,
yeah.
It was akin to the data enrichment that Meta gained, at the time Facebook gained from the Instagram acquisition. And I agree. Just because you're talking about walled gardens versus non-walled garden ecosystems, and Zeta's agnostic, right? So them taking Live Intent off the market was huge. Marigold is another one. Right, is huge moving forward. Specifically, the loyalty program. I think this is the best piece. That and Cheetah Digital. Cheetah Digital was also
in the European market. You know what I mean? Like they go in there, and it's like, okay, well, you got the American markets with Live Intent, and then they go and acquire Marigold with their loyalty program, and now it's like, dude, they just got. Do you know the exact number? Like how many millions of people is data they got from this deal?
No, and that's what I mean. So like what I was kind of alluding to when I had that whole spiel about the SKU data from the Marigold acquisition, or the enterprise loyalty program, is I want to hear about like how much data, how much more information. Did their database grow? Like what are we looking at here? I want them to quantify that a little bit. I'm hoping analysts will pick apart that, and data is going to be topical, right? So I think moving forward into 2026, financial year 2026, you're going to see a lot of analysts talk on earnings calls asking about proprietary data, first-party proprietary data, because for analysts at these large companies like RBC or Goldman Sachs, JP Morgan, et cetera, for them, they're looking for differentiators. They're looking for things that can indicate that this company is durable and it can survive the agentic era, and that actually the agentic era will be a massive tailwind for this specific company. And one of the main indicators that would suggest that is proprietary first-party data. And if you have that database, right, like for example, like S&P Global, massive first-party proprietary database, AI is going to be a huge tailwind for these companies, massive tailwind for these companies. So essentially, at the end of the day, if analysts can pull that information out, and I think they will, we're going to see that tomorrow, it's going to be critical. Absolutely critical for the success of a company in terms of like stock price success, right? I think the company is just going to execute and continue to execute through all this turmoil. You can see there actually, Ronnie, if you scroll down just a little bit.
Yeah, I'm trying to have AI do it for me.
Your Claude bot. You see, it says extending Zeta's global reach. The acquisition expands Zeta's EMA or EMEA footprint and creates an entry point into APAC. Right. That's very good, right? Increase their international footprint because right now Zeta, I think, was it 94%, 94 or 97% of all revenues from Zeta comes from North America. Even though their database is about 50-50, they have a massive global database too that's just about the same size as their North American database.
Just even like seeing this Cheetah Digital 400 enterprise brands powers the most complex loyalty programs. Hilton?
Yeah.
Dude, that's massive.
Yeah,
that's
huge.
They're getting all of Hilton. Anybody who stayed at Hilton, they're getting that data.
Yeah.
Dude, just that alone, that just tells. And they got, 40,000.
Ronnie, I want to stress this point, guys, just to the viewers right now. What does that mean? What type of information does that mean? That means if you booked a room at the Hilton and you have a membership with them, right? You have some sort of loyalty program, so you collect points, so you get a free stay, and you had room service where you specifically said, hey, I wanted this coffee, this appetizer, whatever, and I need an extra room key, and I wanted to go to the pool at this certain time, and I need to gain access to that. All that data is collected and it's attributed to your profile. Zeta has access to that. So in a marketing world, that's ridiculous. The amount of like micro level signals that you can then attribute and apply to an individual is crazy. So when you're talking about advertising, this is the creme de la creme.
Dude, they're making big boy moves out here, and it's insane.
Yeah.
It's insane because this is such a it's such a small company in the grand scheme of things. And like the Live Intent, now Marigold, dude, they're not acquiring Live Intent and Marigold for their revenues. They're acquiring them for their freaking data, guys. Like
it's all about data, guys. And in the world of AI and agentic AI,
consumers reached with all of these products, with these 40,000 brands, unique consumers reach estimated 500 million to 1 billion individuals globally. So even if that's not accurate, it's somewhere in the hundreds of millions.
Now, my question is like, and this is where I want some clarity. And that's sort of, again, another opaque thing. Does that attribute Zeta's current database plus Marigold's? Or is that just saying Marigold's database, right?
No, I only prompted for Marigold, dude.
Because then you're looking at Zeta's database has then clearly roughly somewhere between 1 to 1.5 billion unique individuals. And that's the type of thing I want to hear on this earnings call. And I'm having my ears wide open for, because when they say stuff like that, to me, those are clear differentiators that this company is getting stronger and stronger and stronger. And AI is only going to be a bigger tailwind, because when you have those unique individuals, that proprietary first party information, like look at all those companies, those notable users, sorry. Let's just grab my attention. Like this type of information is like, you can't get access to it. Like an AI can't just go out there and collect that information from a third-party source.
This is insane, dude.
Sorry, I'm rambling a little bit, guys. So Nate, do you have anything to add here? What are your thoughts?
No, I think it's nuts. I'm curious to see all the
look at this
companies: Starbucks, Walgreens, Williams-Sonoma.
Dude, Williams-Sonoma is like huge for females. Starbucks is huge for females.
I hear Nate hangs out at White Castle all the time,
Hilton, Great Wolf Resorts, that's a huge thing in America. American Express.
Yeah,
it's nuts.
That's just one. That's just a Cheetah Digital.
Yeah.
Then you have, Business Insider, Morning Brew, The Telegraph, Daily Maverick, Hearst, Revlon, Rent the Runway, Thrive Market. I don't know what the Adidas.
And I think for me, the big thing that the reason I like Zeta a lot is just the way that David handled the company earlier on, where they re-architected for this sort of movement. I think obviously A, having the data is great, but B, you have a crappy old archaic platform, it's not as usable. Yeah. Whereas they've planned for this, and they have the platform, and they have the data.
Yeah.
And it's just a matter of monetizing and operating effectively.
They did it right from the start. You're right.
That's all it takes. Yeah.
Dude, AT&T is so big, and it gets you so much access. Like that's just.
Yeah, think about the data they're collecting there. Like what type of, you know what I mean?
Dude,
It's
AT&T is everywhere, dude. Like,
Yeah.
wow.
Yeah, honestly, the international expansion for this company is going to be crazy, really crazy.
Curious on, do you know? I feel like ad spend in the U.S. is probably much more effective. I could just be assuming incorrectly. Do you know the difference in terms of ad spend in the U.S. versus EMEA in terms of what it actually comes down to of a spender? So, like, let's say in America, an average person spends $100, whereas in Europe it's $10 or $15. And so I'm again, I'm not as bullish on Europe. I think the international expansion is great. I guess I'm not educated on the sector itself. Oh well, here comes AI.
Dude, that's pretty good.
Yeah. No,
like
good.
they're behind, but they're not that far behind, honestly.
Yeah. And it also depends on how high quality of advertising, like ROAS you can give, like return on advertising spend. If you can give a much higher quality return, then people are going to spend a lot more money. Yeah. Let's talk about that in a second here, but just to kind of close at this point, something to note is privacy rules and regulations in different geographical regions, right? So North America tends to be a little bit more laid back in terms of like privacy rules. Like you can advertise with a little bit more pointed access in North America than you can in Europe. Europe's a little bit more protectionist about that. Now in Southeast Asia, India, these type of places, I have no idea what the regulation looks like there. But these are exciting markets, very, very exciting markets for a company like Zeta Global.
Yeah, no, I fully agree. And that's another concern I have too, is international expansion is going to be great. But obviously Europe is very stringent on their policies and their privacy stuff. And so I think it's not going to be the same monetization we're seeing in America, but it's still, I mean, the fact, like you said, that their data, first party data is like 50-50 America across the world, and they only have like 95% of revenues from the US is like, clearly there's plenty of growth there regardless of policies.
Yeah. And a whole new business segment too is business intelligence, BI. And barely anybody talks about this. Now, business intelligence is the ability, and David was kind of probed about this in a podcast I listened to back in 2024. He was probed about the idea of like, okay, what's next? What's the future of Zeta? What goes beyond marketing and ad tech? And he kind of pointed the viewers in that or listeners in that podcast towards the idea of business intelligence. And what does that mean? It means the ability to communicate with a client, like an enterprise client. Let's just say, again, American Eagle. American Eagle says, hey, we're thinking about opening up stores in this location, this location, this location. Zeta, is that wise? What information do you have about the consumer to tell us whether or not this is wise to expand in that direction? Or would you recommend something different, right? Now, what's cool about that is Zeta then can kind of do consulting and offer business intelligence as a whole separate revenue stream. Now, I don't think it could be as profitable as something like what their MarTech stack currently, but what it suggests is that Zeta can diversify into new markets and expand their TAM by simply just utilizing the same data for different purposes with the exact same client and being more of an end-to-end solution. So not only are you helping the CMO, you're helping the COO at this point in time, right? The chief operating officer or the CEO or the CEO who wants to expand and grow a brand into new regions. So let's just say you have a North American brand and Zeta has global reach and they have intelligence, business intelligence, data essentially about the consumer in Europe. Well, who better than to consult than somebody like Zeta Global, right? Meta's not going to give you that information, even though they have a ton of it. Zeta Global will, though, because they are the fourth largest first-party proprietary database or intent database outside of the three main walled gardens, Google, Meta, and Amazon. Okay, Ronnie, what do you got on screen here?
This is from their last earnings. Just trying to go back from looking at that data. Just see if we can pick up anything. This is expected to significantly enhance data cloud capabilities, including loyalty programs to train proprietary AI algorithms like Athena. This is from the Marigold acquisition. So obviously they know how much data they're getting.
Yeah.
So
Ronnie, I'm going to send you a clip here. Just keep going on. I'm finding something. I'm going to send it to you on X, but I want you to pull up here in a minute. But anyways, keep going.
Let's see. Some other quotes by David, but we didn't talk about did you button up what you wanted to button up with this? Because I want to talk about the FIFA.
Yeah, I want to talk about that in a moment too, for sure.
Okay, cool. We have superior artificial intelligence and data to our competitors. Like, come on, First thing, we have superior artificial intelligence and data to our competitors that we started developing 8 years ago, not 8 months ago. Our consistent execution over the past 17 quarters as a public company is a credit to our artificial intelligence, our people, and our data. Chris Greiner, the theme of the Investor Day in October was durable, predictable, and profitable growth, and our third quarter results are a perfect illustration of this. And here we go. David Steinberg on Marigold Synergy. Strategically, the data that we pick up, including the loyalty program, will be game changing to training our proprietary algorithms and widen our data cloud moat.
Yeah.
I mean, this is why I wanted to look back at this, dude. This is why I want to look back at this, because we just talked about, we just did some like AI research into, okay, how much data are they actually getting? Because like,
yeah,
I was we were deep and heavy into the Marigold stuff, and then kind of like everything else happened with OpenAI and stuff. So kind of like for me, it kind of dragged my attention away from it. I was like super bullish on it, but now like circling back on it, it's like, wow, dude, wow. Like,
yeah, man, that the last sentence there, and widens our data cloud moat. I want them to quantify that. So circling back to a previous point I made, I want them to provide more color. What does that mean? Are you now do you have 1 billion unique identities, not 550 million, right? Like what is that number now, right? Yeah. Because clearly you have a massive sum of data you just took in. So after you kind of filter out similar identities, what does that look like, right? I really want some color there. And I hope, and I do think analysts are smart enough to kind of hammer down on that point. So who knows, maybe one day we'll be like Amit and get a question on the Robinhood.
That'd be cool.
Robinhood, that'd be really cool. And I, if I could ever recommend something to David, like please go to like a video call format, because App11 does it, Palantir does it. People love these video calls.
People love it, yeah.
And
he does so many interviews and stuff too. It's so amazing. Yeah. I'll get the link that you sent me.
Yep, let's pull that up. That's the last thing I want to touch on before we move over to the FIFA topic, because that is a huge cliffhanger. Right?
I did want to say one thing before it leaves my brain.
Sure.
With the Europe, like it's a little scary, right? Because Europe is very, very quick to to fine and to go after any American tax, not American tech company. Not to like, crap on the EU and stuff like that, but it's like proven, like they hit them with a lot of fines. So I think, and this is where you really have to trust in the team, like David and Chris Greiner. This is where you have to trust in them, because we may not see Marigold like and everything happening there and like the reward for it for a couple quarters. And I'm okay with that. Why? Because I want them to be safe and go the right route with this. Because if they try to do it quick, we all know like it could, some bad things can happen, right? They don't need another lawsuit. They don't need a fine in EU.
You know what we say here in Canada, that the Americans are trigger happy. The Europeans are, quite happy to call their lawyer.
Very true.
Okay, let's move on to that video.
All right,
I just offended everybody on this stream, minus the Canadian.
Is it Canada or is it America now?
Yeah, I don't know, man. I put us up for sale apparently.
Dude, I'm not gonna lie, man. Yeah, Canada should have won that thing.
Did you guys see that the call from the locker room?
Yeah.
No.
Yeah, that was pretty wild.
Anyways,
let's throw up this video. You got the video up?
Yep.
Okay, so guys, give you some context. This is a video I captured not too long ago. This is from CES, and specifically with Adweek. So Adweek is this unique kind of company that covers everything and anything to do with ad tech or martech. So this is a very important clip.
Talk a little bit about the OpenAI collaboration. Talk about the significance of that.
It's funny because the OpenAI partnership, which we worked on for a long time, is a very, very big deal for us, because we're now going to be native to their application layer and vice versa. So you'll be able to use Athena on your iPhone. You'll be able to use Athena in the Android environment. You'll be able to do it anywhere where OpenAI is. You'll be able to use Athena to manage your entire platform and the entire UI. The other thing that people brought up to me the other day that I'm not sure everybody's considered yet is, if you look at the enterprise software business, because we're a software company, over the last year, there's been this massive narrative that the large language models are going to come in and take all our business, right? They're going to one day wake up and OpenAI is going to decide we're a $1 trillion company, but we want to focus on marketing automation. By partnering with them, that comes off the table. There's no chance they're going to come compete with us. They're partnering with us, and we're working together on taking marketing automation to the next level.
So this is very unique. Like he said a couple things here that made me, kind of take a second look and have to listen to that video a couple times. But one thing about being integrated natively at that native layer of OpenAI and being accessible on an iPhone or Android makes me think he's getting ahead of this commoditization curve, where if everybody, and he's anticipating at this sort of enterprise level, if enterprises are going to be integrating OpenAI or Cloud Code or whatever it may be into their company, if Zeta is already native to that infrastructure, right, that infrastructure layer, then they can then access Zeta right from there. It's specifically Athena, and then integrate with that. So I think that's very tactical and long-term thinking, perhaps. That's one way to look at this. Maybe there's other applications to utilizing Athena on your iPhone or Android. Who knows? And we'll probably get some more color on that in the earnings call. But the last thing was he kind of said at the end, partnering with OpenAI removes the threat from being on the table. Now, he didn't really talk about that, the data and like the data mode advantage here, but I guess that's evident. But when he said that, it made me think, okay, is there a potential here for OpenAI to acquire Zeta? Now, that's not something I personally would want to see, but it's very interesting because it's like, if they perceive them as a threat, perhaps, or at least, somebody who would be interested in the ad space or MarTech space, because they are collecting a bunch of first-party data, OpenAI and ChatGPT, right? By integrating with them and partnering with them, it removes them as a threat. Does that cue Zeta up? Like, I'm just asking myself and kind of thinking out loud here. Does that cue Zeta up as a potential acquisition target for somebody like OpenAI? We know they're trigger happy to kind of hop on the next new thing, like they bought whatever Clawbot or whatever it is called after they had that little bit of turmoil with Anthropic. But
I pulled it up on
I'm
AI.
not sure. Sorry,
I pulled it up on AI while we were talking because I was like, I'm pretty sure OpenAI acquired, OpenClaw now.
Yeah.
So it's like it's funny because like everybody's so scared of OpenClaw, right? And everybody got Mac Minis and shit, and everybody's scared about it. But then it's funny because Zeta partnered with OpenAI, who now has rights to OpenClaw.
Yeah.
So, and like, I wanted to ask you this because I feel like the partnership, especially with GEO, Generative Engine Optimization, replacing SEO, I think Zeta goes farther and they actually partner with more LLMs. I think they partner with Meta, with Llama. I think they partner with Perplexity. I think they partner with Anthropic. I think they can partner with Gemini, Grok. I think they can really partner with all these companies once Zeta really goes out like with OpenAI and shows like, yeah, this is GEO. This is what we're doing. This is what we've been working on since September of 2025. And no one else has a clue what they're doing. No one else has a clue of GEO and like moving in that direction. Zeta is first mover on this. When you're first mover and like you have the data that Zeta has, we got to talk about that. What do you think?
Do you want me to take that or Nate?
Nate or Nick, whatever.
Yeah, I mean, I think, like you said, they have a first mover advantage there. And I do think, back to your question too, Nick, I don't think a buyout is possible. I don't think Zeta would be bought by OpenAI. It is interesting though, the fact that he said that now they have a partnership. Essentially, they're not going to be competing. But yeah, those are my thoughts. Sorry, I'm a little tired.
No worries. Okay, I'll pick it up from there. So we should probably delineate, Ronnie, circling back to what you said. Sorry, repeat what you were just saying. I just had a brain fart. Completely just lost my train of thought.
Yeah, you're good.
Nate and I are burning out here.
Yeah, literally, brain fart. I was like, what did he talk about?
Just with Zeta being first mover on GEO and how I believe because they're first mover and how much data they have, I believe that partnerships will come with perplexities and anthropics and Claudes, and I know Claude's anthropic, and Geminis and Groks, because no one else, where have you heard GEO? Where have you heard generative engine optimization besides out of Zeta's mouth
So
back in September?
GEO tools exist, and they exist mainly for the SMB. On the enterprise level, to this extent, in the integration into one ecosystem at just essentially one activation channel that Zeta offers, Zeta is a first mover in that space. And a competitor on the SMB level, now Zeta doesn't actually do any work in the SMB, is SEMrush. Now, in theory,
But they just got acquired by Adobe.
yeah, they just got acquired by Adobe, right? Which is, you know, this inherent natural competitor to Zeta Global. But SEMrush isn't necessarily designed for the enterprise application, right?
They're designed for like social media and like
Exactly.
smaller companies.
But they do have geo optimization, right? So a lot of these little smaller companies are out there. What they tend to be are SEO companies who are making the shift, panicking, saying, oh crap, like something's happening. Our bread and butter is about to be just incinerated overnight. We're shifting to GEO and that sort of niche. Now, that's what I wanted to delineate. So when I had that brain fart, that's what I wanted to address. I just completely, it disappeared.
But they don't have
too many
the
numbers
data.
running in my.
Yeah, but they don't have the data or the connections that, I mean,
No.
SEMrush has more connections now with Adobe.
Yeah.
But let's be honest, like it's not like Adobe's going to bring on SEMrush and it's just going to be like, oh, like it's not like it, like SEMrush just becomes like this thing that's going to save Adobe and like,
No.
you know what I mean? Like they're not going to put like all this attention to it. Basically comparing it to like Zeta, this is all their baby. This is their baby. Like they understand the data they have. They understand what they're doing here.
I do think so. To circle back to your point, like, okay, Zeta right now is partnering with OpenAI. Do they stay agnostic moving forward and partner with all the other LLMs like Gemini, Claude, which is Anthropic, and Llama with Meta? I do think so. I do think that Zeta right now, the use case, something that's very flashy. They're integrating with OpenAI. OpenAI is on the forefront of this. And something also to, again, another delineation here is that Claude through Anthropic, they've been heavily focused on enterprise. That is their bread and butter. Where OpenAI is the consumer, the sort of, what do you want to call this? Like the status quo, the everybody knows it, LLM. Now, I think there was a study done recently and people were asked like, okay, what type of AI tool do you use? Everybody says OpenAI, barely anybody says Anthropic or Claude because nobody really knows outside of enterprise or, you know, people like us who watch the stock market every day and it's going red because all we see is Claude. Somebody is like, you know, vibe coding my job away and, you know, finance bro or corporate bro is sitting in the stall at work with his face in his hands, freaking out. But yes, what do I think is I think that OpenAI is a great place to start because OpenAI has the average consumer. The average individual who uses AI to do, you know, day-to-day things is using ChatGPT, right? And so for marketing and intent data, utilizing that data set first and partnering with them first is a very smart thing to do because first party data is different, right? All kinds of different first party data is different. I made this analogy for Aria recently. Netflix collects first party data. Meta collects first party data. That type of first party data is not the same and cannot be utilized for very similar things. And it goes down to the extent of that data collection. Meta allows you to collect strokes, interactions, screen time, view time, messaging, likes, et cetera, comments with products, different interests, different categories of information, where Netflix allows you to just watch shows, movies, et cetera. That's a different type of first party data. The data that you collect on Meta would be able to suggest the intent of an individual. What are they likely to buy based on their interactions? Netflix, that first party data collection won't tell you what somebody's likely to buy. It's going to tell you what somebody's likely to watch, view next, or how long, or what type of trends specifically for that sort of media. Different type of first party databases.
What shows
exactly.
to show them, all that
now,
stuff.
I know Nate's got to go here in a moment, but
yeah.
Just to close this off before Nate's got to go, and then Ronnie and I will continue, essentially hammer down this point. The difference between partnering with OpenAI and Claude or Anthropic is the difference between the type of first party data. OpenAI is more likely to collect high quality first party intent data, where Claude through Anthropic, they're getting a lot more enterprise clients. So they're getting a lot of information about how enterprises work, or, you know, maybe data engineers or coders or whatever it may be, where Joe Schmo or, you know, somebody's wife is using OpenAI to search what they want to buy tonight for dinner, or what recipe is good, or what Lululemon trend, or what Aritzia trend, or whatever it may be. They're using ChatGPT for that purpose. They're not using Anthropic. They don't even know what Anthropic is. So for Zeta to come out and make a partnership with OpenAI, to me is a really good sign, because they have that first party intent data, and they're going to want to capitalize on that because they want to become profitable one day. And to be integrated at that core native level with OpenAI and Zeta Global, it is perfect, because that becomes a whole new channel. Zeta can then push these enterprise clients to then advertise on OpenAI, right? And so to me, it's intuitive. It makes sense, right? It's a partnership that works really well together. Anyways, Nate, I know you got to go. We'll see you tomorrow.
I appreciate you guys having me on. Talk
Yeah,
to you guys
man.
later.
See you tomorrow, brother.
Have a good one, man.
Take it easy.
Peace.
So while you were talking, a point that I wanted to make was, oh gosh, I think I lost it. Oh man, it was something good. It was
Well, I
good.
was
It
talking
good.
about data,
Yeah.
OpenAI, types of first party data. What was it?
Dude, what was it, man? Oh no. Well, one thing was the amount. Oh, two things. There it is. Remembered it. The amount of data. This is my quick little one. The amount of data that I believe that they'll be able to pull in from OpenAI and ChatGPT as well is going to be massive. We don't know. We don't know the back end of that. Obviously, we don't even know if they'll get any of the data, right?
Yep.
We don't know that. But the second bigger thing that I wanted to talk about was when you watch a YouTube video, is there more or less ads than there used to be?
There's a lot more.
When you search the internet, when you're on TikTok, when you are on Meta, when you're on Facebook or Instagram, is there more or less ads?
There's a lot more. Yeah.
Okay. So Claude comes out with those funny commercials, and it's like, we don't have ads, blah, blah, blah. And it's funny because what happens every single time when one company makes that pivot to, we're going to do more ads. We're going to put ads in this. And then because people don't like change. We all know this. Nobody likes change. When something changes, when a system changes at your work, we all know, I'm talking to you, Johnny, we all know that no one likes it. Nobody likes it. You have to go along with it because it's your employer and it's what you have to do, but no one likes change. So ads used to be less. Now they're more. You really going to sit there and tell me that OpenAI and ChatGPT are the only ones going to be running ads? Come on. Come on. We're not dumb. We are not dumb, guys. Come on. Claude can sit there and make fun of it right now. But guess what? Google already runs ads with their search. Okay. So they're going to transition into running ads more. And OpenAI is going to do it. They're going to be the bad guy. They're going to be the bad guy that does it. But then other people are going to see, oh man, like it's actually smooth and clean and it works. And we could do it better. And we could do it better. And we can make more money from this, blah, 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 blah. And then there you go. Next thing you know, all LLMs are running ads. And who do you think they're going to? Because one of the, when you're talking, one of the quotes, and I'm not going to quote it exactly, but one of the things that David said, I don't know if it was during our interview or during your interview or one of his, I don't know. But do you remember when David said that, you know, Wall Street and companies and all these businesses are so intertwined in behind the scenes? They're so intertwined. Everybody knows everybody's kids. Everybody knows everybody's business. Everybody knows what everybody's doing, right?
Yeah.
And just the fact that he is linked with John Sculley, right? The co-founder of Zeta, who was the CEO of Apple. I mean, dude, talk about you're intertwined. Yeah, you're intertwined in the tech community. So that keeps sticking out in my head because why is that important? Well, it's important because with OpenAI and ChatGPT, who are they intertwined with? Everybody.
Yeah.
It was the joke. It was the joke where it was who is an OpenAI partnering with? But they're intertwined with everybody. That means they're talking if, right? Because Zeta's got to deliver. We can't just be like, oh yeah, like blah blah blah. Like they have to deliver. If they deliver though, in OpenAI, what do you think they're gonna do? If OpenAI is running ads and they're talking to all these companies, they're talking to all these big companies, and they're like, hey, we can run ads. We can pinpoint the exact person that you're looking for, the exact trip that they want to go on. We can pinpoint that. If Zeta delivers with ChatGPT and OpenAI, you are looking at something. You're looking at a huge flywheel for Zeta and a huge like blast the door wide open, and they're gonna be getting a lot of calls. They're gonna be getting a lot of calls. So hopefully I did well explaining that, but like that was just on my mind. I'm just like, yeah, man, like, and David, no one talks about this. That people want to talk about like the bad stuff and make David look like a bad guy and stuff. But like, David's been around the block. David has run multiple companies. David has very deep ties with a lot of great John Scully, like a lot of great businessmen and women. Like this,
I agree.
Man. Every time we get on these live streams, man, I'm just like sitting over here. I'm just like, I need more leaps. I need more shares, dude. Like
I feel like that often, dude. I'll wake up in the middle of the night.
Crazy.
Here, Ronnie, do you want to pivot over to the FIFA World Cup? But I'll be right back. I'm just going to the washroom, so just make that segue, and I'll be right back. Okay.
Yeah, guys. So obviously, we know the FIFA World Cup is coming up, and it's going to be massive. You want to talk about ads? It's not arguably. It's the FIFA World Cup is the largest sporting event in the entire world. Bigger than the Super Bowl, bigger than Wembley, bigger than all of it. The FIFA World Cup is I'm pretty sure it's bigger than the Olympics too. Soccer is just football is the world sport. Is the world sport, no matter what, even as an American, I'll say it, like it's the world sport, right? So the amount of ads being run this year during all those FIFA games is going to be huge. The amount of traveling that's going on, the amount of consumer spending going on, not just in America, but in all of North America, right? Because the FIFA World Cup's going to be in some in US, some in Mexico, I believe some in Canada. Let me use Gemini. Where are the locations for FIFA World Cup? Guys, just a sheer amount of moving parts, people spending, people traveling, people going all over the place is just going to be insane. So 11 cities inside the U.S. I'll share this. 11 cities inside the United States: New Jersey, Texas, California, Georgia, Florida, Missouri, Texas, Pennsylvania, Massachusetts, California, and Washington, and then Mexico and Canada. Look, I was right. Holy crap. I can't believe I was right. Yeah. So Mexico City, Guadalajara, all that, obviously, all that stuff in the news right now is not so good for that stuff. But the main point, guys, US, Mexico, Canada, North America, massive amount of people traveling from overseas to the US, spending like crazy, traveling, right? And then like don't just sit there and be like, yeah, there's going to be soccer games on all the time and there's going to be tons of ads to be shown to people. No, it's way deeper than that, guys. Way deeper. You have so much traveling going on, which means you have so much data being gathered, and then you have, while they're here, you're showing them ads through Facebook or Instagram or TikTok, and then they're purchasing more and more and more. And one of the biggest things, and I know a lot of my European and all my friends from Europe and everything, I know you guys know this, but every time that people come to America, things are usually cheaper, so people spend even more. I've noticed that from my time whenever I was at Disney World one time, and this guy from Australia was like, "Oh yeah, we bought a new MacBook and iPad and all this stuff," and I was like, "a new iPhone." I was like, "Why are you buying all that?" And he's like, "Well, it's way cheaper. Taxes are way cheaper." Blah 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 blah. So yeah, there's my spiel on it. What do you got to add?
Yeah, well, I think that the World Cup is a massive revenue driver for a lot of companies locally, right? And driving ads is the ad space is booming whenever you see these type of events, right? Like the Olympics is going on right now. The amount of ads that you're seeing, the uptick in ads, and the convent of advertisers coming with new content or new products and timing them all at the same time. Like Adidas, for example, Adidas was brought up as a client there of Marigold. Now that they're in the Zeta roster, Adidas is huge with FIFA, right? The same with Nike, these type of companies. These companies tend to launch new soccer cleats or new soccer balls, new outfits, whatever may be, jerseys, and sponsor these teams individually and push those products hard during these new sports events or these large sports events. So you saw a lot of that during the Olympics, I think, which is now closed and over. But with FIFA World Cup, this is the world's largest sporting event. This is even bigger than the Super Bowl, way bigger than the Super Bowl, right? So the amount of people watching this globally is huge. So if Zeta was actually to make an international expansion this year and hammer down on international growth, there's no better year than to do it this year in particular, because the amount of eyeballs that are going to be sort of gravitating towards an event like this is it's hard to quantify. I mean, you can actually probably look that up, Ronnie. Now, there's a couple of tailwinds lining up. You have the political spending from this year's midterms. You have the Winter Olympics that just happened, and now you have the FIFA World Cup 2026, which is huge, right? You have all these different things.
I was kind of thinking a negative thing, though. It's going to be their comps for next year are going to be pretty difficult.
Yeah. Now, it's all about the relationships that you build this year, right? The way, on the upside that I want to look at this is that obviously there's this natural cyclical portion to ad spending, right? And political spending is obviously cyclical. These events like FIFA World Cup are cyclical as well because they come and they go. Something that I kind of want to look on the bright side of this is that if Zeta's make a huge international push and a huge push, just sort of generally speaking, the enterprise brand relationships. Sorry, I just stuttered there massively. You can tell I'm getting tired, guys. The enterprise brand relationships that they build this year are critical, actually crucial, because they become integral for the expansion and the continued revenue growth and the multiple expansion of this company, right? Because if they can really hammer in those new clients and show that they can actually be very rewarding if brands spend ad budget with them, that they will come back to them next year and the year to follow and the year to follow that. And whenever they really want to push something new, who do they come to? They come to Zeta Global, right? So this year is critical in my opinion. There's so many different things lining up that are great for this company. So yes, next year, will we see the downside of not having political spend and ad spend? Yes. Did we see that in 2025? 100%, right? Because 2025 wasn't a political year. 2024 was, right? All the extra political ad spend happened in 2024. So did we see revenues drop down to like those 20 percentiles? Yes, we did.
Right? But not quarter over quarter.
Yes, correct.
Quarter over quarter, they stayed. They continue to grow. So
exactly.
Yeah, I think you're spot on, man. Like the relationships and everything they're going to build. And even if they came in with like a 15 to 18% revenue growth, they're expected to grow 35% this year. So you got to average it out over the year. So if they grow 35% this year and then like 18% next year, and then they're back to 20%, do the average. Like, come on. Like it's gangbusters, guys. It's gangbusters. So yeah, man, how cheap this company is just crazy. Like, people want to sit there, like we talk about, and they're like, oh, this company just can't go up. Like, this company's trash, blah, blah, blah. And it's like, dude, like literally nothing has happened. They didn't announce anything. There's nothing. There's no bad news. There's no hit piece. There's no short report. There's no nothing. No nothing.
Yeah, the negative sort of headwind that's looming is the result of that legal case, right? Like what's going to happen? The judge
that's not even the reason for the sell-off. And honestly, if it came out now, I mean, it could make it sell off more, but like, I feel like the weak hands are out of this name. We have to
Yeah.
remember too that Zeta hit a peak where everybody was a guru on Zeta in the end of in December and January. Everybody was a guru. Everybody's been talking about Zeta for a year, right? Bullshit. They haven't. But I digress. They're all gone now. They haven't been talking about it, and then now they're on the other side and just like, oh, this company's trash, actually, like, or they don't talk about it because it's down in the dumps. Like, what you get out of me and Nick here, Wolfmatica, is look, we're in some names like Pagayo, and it's gotten taken to the woodshed, like bad. I'm down like 50%. I haven't been down on 50. I haven't been down 50% on a position in a very, very long time. I thought it was cheap, and then it got a whole lot cheaper, obviously. But I'm still holding because I still think the business is undervalued. And like something like Zeta, me and Nick, we're going to talk about it in the good times. We're going to talk about it in the bad times. And people want to come at us and be like, "Well, you were saying it should be a $30 stock." I still believe it should be a $30 stock. It's an even better opportunity now than it was at 24. I can't we can't help that we're bullish here, we're bullish here, we're bullish here, we're bullish here, we're bullish here because there's a massive mispricing on this company. Is there kind of like some bad luck? Like, because look, they had a massive cup and handle. They finally were breaking out. It like we were gonna go on this massive tear. And I swear it was just gonna be like quarter after quarter, they were gonna come in and just shock and shock and shock. What happened? Claude and the SaaS sell-off happened, guys. We cannot control that the entire market now thinks that Claude and Clawbot and all this crap, it's just going to fully replace Zeta and Intuit and ServiceNow and all these great companies that have all these deep ties with these businesses, that have all of these integrations with these businesses. CrowdStrike, PanW, they have all of these integrations on the back end, on the front end of all these businesses. But yeah, some stupid little Clawbot bullshit is just going to completely come in, and someone's going to vibe code something, and they're going to be able to sell it to Fortune 500 companies. And they're going to buy it, and they're not going to ask questions on like, well, is this safe? Is this proven? Can it stop China from hacking us? Come on, man. Like, this is deep. And again, why I don't think there's a bear market. And I don't think this lasts more than like a 10 to 15% overall correction is again, because I feel like it's a DeepSeek type move. When was DeepSeek? It was April, July, right? January? Yeah. Oh, right here. April 2024?
No, it was like January 2025. You can't even see it. Yeah, because they only really hit the semis, right?
This, I think one of these was the Japanese carry trade.
Right there in August.
Yeah, this one?
That was August. Yeah. Right there, that red circle, the next one.
Yeah.
That was DeepSeek. It was nothing.
So basically it's like what it is now. So this was from peak to trough about 7-8%. This is about 7-8%. So I just think too much shit is too cheap. And I understand things can get way cheaper and stuff like that, but you have to have like economic macro environment things causing this. Not China just did DeepSeek, not Claude happened. And you can tell, every time Claude posts something, like they posted about the damn cybersecurity crap, and those companies got taken to the woodshed. It's crazy. It's crazy, guys. And then also, no one really talks about, we're at like peak height on puts. Everybody's bearish. It's really, 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 really fucking hard to get a market to go into a bear market and like stay continuously going down when everybody and their mother is super bearish. It is very, very hard. Now, in 2022, in the 2023, when you had the bear market, people were bearish because inflation was out of control. Remember? Out of control. And rates were being hiked. we weren't talking about like, oh man, hope we get a rate cut. We were talking about, oh shit, like we got to raise rates, dude. Like this is getting bad. So yeah, I don't know, man. Call me crazy, but like I just like, oh, so many things are so cheap, dude. Like so cheap. Like Netflix. Look how much like Netflix bear market. Look at this. You want to see that's Netflix in an actual bear market. This is Netflix because they're going to acquire maybe Warner Brothers. Intuit's at bear market lows. ServiceNow is at bear market highs, basically.
Look at Microsoft.
Yeah, dude, don't. Yeah, I mean, oh my gosh. Like, oh, oh, yeah, Microsoft's done. Yep. Come on, man. Come on. Microsoft's literally at the highs of 2023. And they're doing phenomenal. Who else? Like you have Zeta down.
You know, App Lovin being sold off like this makes no sense to me. No sense. You know what I mean?
App
Like
is
Zeta
crazy.
and App Lovin, these are two companies that are going to heavily benefit from the tailwinds of AI and agentic AI. It just makes no sense.
Amazon sold off. Meta is still pretty sold off. And it looks like a bear flag actually too there. That's not. I mean, dude, there's so many.
Yeah, Amazon's selling off because there's a threat. The thesis there is that the utilization of AI agents. This is why eBay is freaking out as well. The utilization of AI agents is essentially going to commoditize these e-commerce interfaces because a human will then interface with their AI like OpenAI or Claude and say, hey, go buy me this or go find me the best of this, right? And then they're going to interface with that. And then all the data that essentially Amazon and eBay are going to collect is just going to be garbage, right?
Yeah.
Now, you can have a debate whether or not there's actual intent and useful information behind that. I think that will be a reality. Now, the question is like, I think this is where kind of Shopify comes into play and Google comes into play.
Just typing in Shopify.
Yeah. Well, they're coming up with a, I believe, I forget the actual technical terminology, so just kind of spare me on this. Is essentially what it is an operating language for these agents to use cross-platform and authenticate them so that they can attribute that agent to an individual. And Google's working on this infrastructure that goes hand to hand with sort of parties like Shopify so that somebody can then log into Google through that Google interface, buy whatever they want, products through Shopify stores or any brands that utilize Shopify, et cetera, et cetera, et cetera. Now, I think that's going to be the dynamic moving forward. Now, through that handshake, everybody who is integrated that common language will be able to collect information and data. It'll sort of be like SKU level data that Shopify collects on the tail end of purchases. It's just going to be more broadly accessible. Now, I don't know what happens there. Like there's a lot of question marks that, we need a little bit more investigation and we need some of this stuff to play out. Does it completely destroy a company like Amazon? Hell no. Right now, does eBay need to be concerned? Maybe, right? I'm not too sure, but if I were them, I'd be hopping on this bandwagon with Google and Shopify quite soon. I know we're kind of segueing off of Zeta here, but
yeah, but I mean, it all flows together, man. You know what I mean? Like you can't talk about Zeta's not downfall. You can't talk about Zeta's massive correction without talking about these markets because Zeta's done nothing. They haven't done anything wrong. There's no new bear thesis. There's no new anything.
Yep.
The shares are coming down. They've proven that. They literally made graphics on their earnings calls to say, on their earnings reports to say, look, this is where we're going. If they don't do that, analysts are going to be like, look. You know what I mean? Like you can't make these nice graphics and then go against it. That's like suicide. Okay. Yeah. But dude, like, again, I just want to hit home on this. Like, again, we looked at Robinhood, Palantir, Shopify, SoFi. They all ran a lot. I get it. But now they came down a ton and their revenues and their margins are starting to catch up to them. So again, this is where I sit there and I say, one, how much, like, they can go lower for sure. And I think if you get, like, I can see it where like the top starts falling off, like Nvidia and stuff, but I can start seeing cash like sell-offs and Nvidia and stuff, and it start rotating into like these deep undervalued sectors. Still like the Nikes, now Intuit's, now Salesforce, Zeta, AppLovin, Robinhood, SoFi, all these companies, right? My second thing, all of this sell, like the prices are going down because people are selling. There's more sellers than buyers. Where's all that money going? Money market funds aren't what they were. The amount of interest you're collecting isn't what it was. There was already what, $7 trillion, $8 trillion on the sideline. Now, probably way more.
Yeah, I think it goes to defensive plays, though, Ronnie. I think it goes to companies like Caterpillar. It goes to company like
for sure,
Fix,
for
right?
sure.
Like those
But-
type of things. Like Caterpillar's up with 30%.
But when you gonna when you gonna sit there and say, okay, Caterpillar, it needs, like, you saw it with gold, you saw it with silver, they're selling off. You're gonna see it with Caterpillar, it's gonna be selling off. And then also we talk about all these stocks. Look at crypto. All the people selling out of crypto, where's that money?
Yeah.
You know what I mean? So this is what I'm saying. Like, you think we can have a bear market right now? I don't know, man. Because in the last bear market, rates were going up, inflation was crazy, and money market funds, because rates were going up, were pretty solid. They're pretty juicy.
Yeah.
You want to sit here and say, I come on, man. And you are in the most technological advanced beginnings ever. This is way bigger than .com. This is way bigger than the internet and the phones. Like, way bigger, dude. So, yeah, man. If I had to say, I would say this whole thing is more or less a deep seek than it is a macroeconomic bear market recession-esque environment. I mean, GDP was bad, really bad, right? And it's funny because I made a video like towards the end of last year, and I was talking about, hey guys, be careful for Q4 GDP, be careful for earnings, which earnings they crushed anyways. But I said be careful because the government was closed down. And before the government was closed down, there was talks of the government closing down, which leads people, federal employees, to pull back on spending. There was layoffs, there was furloughs in the government for federal employees, all during the biggest spending time of the year. Christmas into New Year's, Thanksgiving, lots of travel, lots of gifts, lots of spending. So I think the GDP thing is just like a one-off, mainly because, and even Trump said it, he was like, not to go off just what Trump said, but like, because of the government shutdown, it led to that. And it's very easy to see that and why. So yeah, man. But like, here's the question, Nick. And this is what I can't figure out. When does it end? Because
I don't know.
It's not like with DeepSeek, it was okay, yeah, but like after like another week or two, like Grok and Gemini took back control and they were like, you're shit, DeepSeek, right? This is like a very big fear of Wall Street. And it's like, and you see it with Adobe, right? Adobe keeps beating and buying back shares and crushing numbers, yet it doesn't matter. So you think about that, what can actually get people to shift their stupid mindsets from like Claude is going to replace fucking everything? That's literally what like it seems like what Wall Street thinks. What is gonna be that split? I can't figure it out. I can't.
I think we're in a very similar narrative dynamic to the one that Uber has been enduring with the whole AV scenario with Tesla, right? I don't think we're going to completely get a remedy here, but I think that the consumer and the market sentiment will gain confidence over time from the reiteration of, specifically for SaaS names here, just generally speaking for a lot of the market, of first party proprietary data moats. You're going to come out, you're going to have large figures come out where I'm talking Jensen, likely they report earnings this week too. It's going to be very critical to hear what they have to say. And a lot of these big names over the next couple months come out on CNBC and their earnings calls or wherever they're speaking and talk about data and the importance of data and proprietary data and the acceleration of these infrastructures utilizing AI as a tailwind and AI agents as a tailwind to enhance the utilization of this data, right? To make it more useful, to give the power to the user and to really empower their data set, right? Because it's through these these user interfaces that are quite binary or they're bespoken for and they're locked in stone, where AI allows it to be more organic. Somebody can spin up a UI that benefits them. Party data is going to come into play here. Now, each individual name and where the confidence is for each individual stock will sort of ebbs and flow. And that's that sort of Uber AV narrative that I've been talking about is sort of up in limbo in the air. Nobody really knows. There is no definite answer. And I think we go in that direction. I think eventually what ended up happening and you saw a lot of big activist investors like Bill Ackman get behind the name. You saw a lot of people talk about how confident they are about the net data that they're developing. And that, no matter what, that if some network and, debates end up having, a big, eventually we're going to bottom there, but that's probably like a 3-month.
Simply everybody's talking about and everybody's posting about what just happened. 13F filings just came out and everybody's like, oh my gosh, look at Warren Buffett selling all these companies. Look at all of the sales going on. But we have to understand that it was in Q4. It was last year. This was October, November, December of 2025 when shit was really, really good still. So you really think that these investors with these types of deals out there aren't gobbling up shares right now? And like you were saying, it kind of sparked that in my brain too. Like, yeah, that could be. And you might not need to wait until 13Fs come out, because a lot of these they love to talk on CNBC, man. And they're going to be on there and they're going to be saying what? Eventually they're going to say, Zeta is too cheap. ServiceNow is too cheap to ignore. Netflix is too cheap to ignore. Or you have a
insider buying. You're going to see a lot of insider buying.
Yeah.
What do they have? 30 days to report? I think it's 30 days, right?
Yeah.
So I think in the next couple months, we're going to see a lot of insider buyers for major companies. Like, let me look right now. Let's see if there's anything right now. Then we can kind of wrap it up on this.
Yeah.
Tomorrow's a big day. We're going to have a long stream tomorrow, guys. So buckle in for that one. That'll be a lot of fun.
This is a great stream though, man. We really got to do that podcast. I think we riff really well.
I agree.
Yeah, man. Like, and this is why I can't see a bear market right now. I just it doesn't fit the mold, and everybody's bearish. And again, you have you have so many people buying puts out there. Even in my community, people are like, Ronnie, we buying puts. Like, look at all these millions of dark flow. Look at all these millions of option buyers and stuff, like buying all our options flow going in on puts. And I don't like crowded trades. I don't like when everybody's out there like, dude, just buy puts. The market's going to tank. Because what happens when it doesn't? What if things start going up? And look at it like, what was it, last Friday or something? The market started rising. And I was like, uh-oh, you can have a short squeeze, man. If a ton of people are in puts and you have over a 1.0 put to call ratio and the market starts creeping up, and maybe NVIDIA comes out and they're not going to go down because CapEx is at all-time highs. And NVIDIA is going to be the biggest beneficiary of that. So if they come out and they just destroy numbers and then people are like, oh shit, they're way too cheap actually, which I actually do think NVIDIA is probably still too cheap. Then NVIDIA could go up, break out of the consolidation to the upside, and they're going to drag the market with it. And then you get also everybody covering their puts, short covering, and then you just have a blow off top.
I agree.
And then you're just in this ripper rally maybe into like when midterms come around. Because usually when midterms start, it's usually not the greatest, right? Because you got a lot of bashing and a lot of people talking about what they're going to do, how they're going to change tech company. You know what I mean? They start bashing tech companies and all these companies. It's like, oh yeah, like I think I saw a video in like New Jersey or something like that. They were protesting. They're like, you're not putting a data center here. Fuck big tech. You know,
Yeah, I saw that.
did you see that? Yeah. I love that
Yeah.
you saw that. Yeah. It's just like, yeah, man, like politicians live off that shit. They're like, yeah, man, no data centers here. This is our power.
Yeah. Well, it's just kind of translating back over here to the insider buying. Dude,
Yeah.
I'm seeing a lot of SaaS insider buying right now. You guys need to go check this out. Yeah. So I'm seeing like SMCI. I'm seeing, I just saw a couple other here. KKR. I'm seeing Microsoft. Like, there's a lot of insider buying.
Microsoft's like the easiest buy for like the next 10 years, in my opinion, right now. Like for like Mag 7.
Yeah.
I mean, Meta. Dude, do you do that? Where like you say Zeta so much, and then you go to say Meta, and I said Meta. Dude, it fucks with me hard.
Look at this. So director of Microsoft, John Stanton, he bought $2 million, 5,000 shares.
Damn.
On February 18th. That's remarkable. All my monitors just crashed. I don't know what's going on.
Dang.
Oh, there they are. They're back. That's weird.
Yeah, I mean, I ran projections and valuations on all of these companies, and they're all pretty undervalued. You know, I actually don't think we get into any like issues until 2027. And I think 2027 can be, I think we can have some issues. You know why? Because the sheer amount of spending that they're doing, it's gonna fuck with their margins.
Yeah.
Especially,
you know what? I said this to you too. I said, like, we have QE this year too on the macro level. I think we're going to run into some issues towards the tail end of 2027 too. We could have an inflationary environment. It's possible. It's very possible, right? It depends on how things pan out. But you got to remember, like just talking about some macro stuff here. Trump has midterms. Odds are he's probably going to lose those midterms, and we're going to have a split House and Senate. So he is likely going to retain the Senate, and he's going to lose the House, which means that you kind of have a president who can't do much, right? And they're going to likely push him hard on any economic policies that he pushes, that, in terms of tariffs and stuff that he wants to get through. What does that mean for the economy? I don't know. I'm a neutered state in terms of presidential capacity. Have a 2024, 2025, some more stagflation. Right. I don't know what that dynamic looks like. We're gonna have to wait and see how that pans out. But with all this, and in the Fed, a dynamic where
and printing money and
GDP slows,
I think we're gonna
AI
go
thesis pans out.
But I think we're gonna go a lot higher before,
especially after midterms.
Yeah. 2020 Amazon, dude, like off the cliff. Gross margins and operating margins are doing pretty good, and they're climbing. And recently, still a lot of them in the dumps. Now SaaS in the dumps, cyber in the dumps. Who else? Financials, fintech in the dumps. The only companies really staying steady, even a lot of the data center names, like Iren and Nebius and stuff, like a lot of them are in the dumps. Like, it's man. So
not looking good, man. Like right now, at least, not looking good. What I'm really worried about, though, and we'll end on this, is what happens in a geopolitical event, right? Do we know what tends to happen historically, like a stark drop and a quick rebound.
Yeah.
Does that lead into some sort of V-shaped recovery, right? Does that lead into the market starting to rally and then chop once we kind of meet those all-time highs again, right? Where the SPYs sort of sitting and the Qs are kind of sitting. Not now, but where they were, and kind of chop until midterms, and then after midterms rally hard. Do we see that? I don't know. Maybe that could be a possibility. We're gonna have to wait and see. But the whole Iranian situation for me and the looming strikes is a market catalyst that kind of leaves me hesitant. What I'm hoping is that Zeta rallies hard, after earnings, it gives us that buffer space, gets us above that sort of like what $18 to $20 volume shelf, and allows us to kind of sit there pretty for some time. And then if something does happen, we can pull back to the levels we see now and kind of be a little bit more comfortable. But I do not want to see us hit $10, man.
You know why I don't think we get the 20 for a little while?
Why?
I'm not trying to be I love the company, obviously, and I'm bullish as all get up. I just think when you get these types of waterfalls and these big sell-offs from like 24, 25, I do believe a lot of people sold already. But I also believe there's a lot of people out there where if Zeta rallies hard tomorrow and this week and into next week or something like that, you're going to get to a point where people sit there and say, oh, I got most of my money back. Oh, I'm break even. Oh, I'm a little bit up on the stock. And they're going to be like, what are they going to think? They're going to say, oh, well, I think the market's going to go lower. I think Iran, I think this, that, right? And then they're going to sell. And they're going to be like, oh, just sell now because I think it'll go back down to 14, 12, which it definitely might not. You know what I mean? Like that's not a good way to do things at all.
I
because
agree.
Look at Palantir. You know what I mean? Like the people that were like, they bought it at 5 or 10 or 15 and then it went to 20 and then went to 25 and they're like, I'm going to sell because I think, market's shit. It's going to go back down to 10, 15. And it never did. So
it just ripped.
Yeah. So I'm not saying that's going to happen. I just think there's still going to be a lot of hands in there, but it won't matter. It will not matter if Wall Street sits there and like wakes the F up to this company. Because if they wake up to this company, man, and they go profitable this quarter, and then it's like, oh, and then they just have crazy guidance, which they already guided for 2026.
It really depends on like the market sentiment right now. Like, I don't think
it really
Zeta
doesn't matter
is the one to unicorn.
It matters, but it doesn't.
Yeah, we'll have to wait and see what happens, right? Tomorrow's a big day. So how about we end it there? And we roll in tomorrow, guys. Tomorrow's gonna be a big day. We listed out a couple things to focus on. I'm gonna make a post probably later, maybe tomorrow morning, about things I want to focus on, and we'll reference that in our live stream tomorrow. What are we going live at? 3 tomorrow, 3:15, something like that.
3 p.m. Eastern, or like 3:05 probably.
Okay, sounds good. I'm looking forward to it, Ronnie. This has been great.
Yeah, man, been great. Appreciate everybody. Make sure you like, follow, subscribe. Make sure you go follow Wealth on YouTube and X at Wealthmatica. And love you guys. Hope you guys have a great night, and we'll catch you guys tomorrow.